Bad news said sell, but this stock went plus 60%. Here's what the smart money saw that you didn't. If experts gave AMD an F, why did the price explode, and how can you spot that move before it happens next time?
Have you ever seen a stock get just terrible news, maybe from an analyst, only to watch it completely skyrocket? It's confusing, right? And honestly, it can cost you a lot of money if you're not careful. So today, we're going to break down a method that helps you ignore all that noise and focus on what the stock is actually doing. We'll use AMD as our case study. Let's dive in. So let's kick things off with a bit of a puzzle. Not too long ago, a really popular high-flying tech stock was given a failing grade. We're talking an F. The headlines were pretty clear. This is a stock you should probably stay away from. And here's where it gets interesting. This is the exact problem we're talking about today. On one side, you have the headlines screaming that the stock is an F, that it's ultra expensive. But on the other side, the stock rallied more than 60% in a single month. So who do you listen to? The so-called experts? Or do you learn to read what the market itself is telling you? To figure this all out, we're going to walk through 5 key steps. We'll start with that F-grade paradox, then introduce a system that helps you cut through the noise. After that, we'll apply it directly to AMD's journey, and we'll even use it to see what might be coming next. Okay, first up, let's really dig into this contradiction. How on earth can a stock with a failing grade put on such an incredible performance? I mean, this is exactly the kind of situation where a lot of traders can get tripped up. Well, to navigate all that noise, the method we're looking at today suggests a really simple but powerful rule. Trade with the chart and not with your heart. It's all about detaching yourself from the emotional roller coaster of the headlines and just focusing on the objective story that the price chart is telling you. So let's get to the solution. We're talking about a system, a framework that is specifically built to ignore those emotional headlines. Instead, it hones it on patterns you can actually see, patterns that tend to repeat themselves in a stock's behavior. You know, the foundation of this whole system really boils down to one word: preparation. Instead of just reacting to an F grade you see on the news, it's about doing your homework to understand how a stock actually behaves. And you do that by identifying its movement through very distinct and often predictable phases. And the core of this whole method is seeing a stock's movement in 3 pretty clear sequential phases. You know, first, it sets up a base, a foundational trading range. Second, it kind of hangs out there, consolidating and testing that range. And then third, it tries to break out into a brand new, higher range. All right, now let's apply this 3-phase idea directly to what AMD has been doing recently. This is where the theory stops being theory and starts being a really practical tool you can use. So, according to this analysis, phase 1 for AMD was all about establishing a base. The stock basically carved out its home turf, trading in a range between about $143 and $180. Think of it like the foundation being poured before a house is built. And here's the really clever part of the strategy. You don't just buy anywhere in this range. The system says to target the lower half. Now, why would you do that? Well, it's because it minimizes your risk and it maximizes your potential reward when the stock bounces off the bottom, getting ready for its next big move. Then, after breaking out of that first range, AMD established a whole new higher territory. This was phase 2, a much wider range of consolidation, this time between about $190 and $278. The stock is basically playing in a whole new league now. What's really cool here is that this phase rewards patience. See, during this time, the stock dipped back down to the lower end of its range over and over again. For a trader who's following the system, every single dip wasn't a reason to panic. Nope. It was an opportunity, another chance to load up at a good price before the stock continued its journey upward. And that brings us right up to phase 3. After all that consolidation, AMD broke out again, this time into its operational zone at the time of this analysis. A new higher range is sitting between approximately $280 and $330. So, if we follow the pattern, the system suggests that the ideal buy-in spot would be in the lower part of this new range, somewhere between $280 and $315. History suggests it'll probably test that lower boundary. But, and this is a big but, as the source points out, really strong market sentiment and FOMO can sometimes just rip up the script and push things higher, faster. Okay, so let's look at how this system uses more than just the price to justify getting into a trade. This is about adding another layer of confirmation. Think of it like a sniper using multiple data points before taking the shot. This is where the system gets really smart. While all those headlines were screaming F grade, probably because of a high PE ratio, this method looks deeper. It looks at the PEG ratio. And what's the key difference? The PEG ratio factors in growth, which for a company like AMD gives you a much, much more complete picture of what it's truly worth. And get this, at the time of the analysis, AMD's PEG ratio was 0.8. So according to this guide, anything under 1.0 is considered a good price. This one little data point completely contradicted that whole ultra-expensive story and backed up the idea that, hey, despite the high price tag, there was still real value here because of the company's growth potential. Okay, so this phase-based system isn't just about looking backwards and understanding what happened. It's also about looking forward, trying to project what the future might hold for the stock. So, the big question becomes, what's it going to take? What catalysts could possibly cause the stock to break out of its current phase and set up a new, even higher trading range? Well, the source material points to two main potential drivers. First is the psychological one, just a huge wave of new buyers driven by good old FOMO, the fear of missing out. And the second is fundamental, the company's actual performance. If AMD keeps knocking it out of the park and exceeding its revenue goals, that provides a solid reason for the stock to climb higher. So how in the world do you forecast a new phase? The analysis uses a technical tool called Fibonacci extensions. It sounds complicated, but it basically uses the price swings from the past to predict where the stock might go next. And based on that tool, the projected range for a phase 4 lands somewhere between $340 and $389. Now, that's not a guarantee, of course, but it is a data-driven target zone. You know, this really brings us to the core takeaway. It isn't just about AMD. It's about a whole approach to the market. It's about being discerning. It's about acquiring real knowledge about how a stock actually behaves and building a system around that, instead of just reacting to all the emotional noise you hear in the financial news. And so I'll leave you with this final thought to chew on. When you look at the market, what's really guiding your decisions? Is it a systematic, logical reading of the chart? Or is it an emotional reaction to the headlines? The answer to that question could make all the difference.
Watch closely. The difference between losing money and catching the move is just one simple shift in how you read the market. Follow for more no-noise, data-driven investing strategies that actually work.